Thank God it's Friday. Let's do Friday business. 55 minutes of current and relevant business talks right here on Business Morning. I'm Ini John Mekwa. And we start what we normally do from the global space, the oil price space, where prices rose more than 1% today after previous steep fall. And they were heading for a first weekly drop in nearly 2 months as supply concerns ease and investors focus on the outcome of that talk that's holding today. U.S. and Iran are looking at the numbers now. A swift or a flip from what we had about this time yesterday. It's green, 1.21%, and Brent is at $68.37. WTI is at $64.13 after it gained 1.34%. And all of this, of course, connected to that talk that's holding between the United States and Iran today. President Trump has threatened to strike Iran, and a lack of consensus on the agenda for the meeting between Iran and the U.S. has kept investors anxious about geopolitical risk. And, of course, uncertainty is never good for the markets. And then we come to Nigeria, where the equities market yesterday hit a record high, 170,000 level, after the oil share gained 1.18%, and the market cap went up to 109.129 trillion naira. Activity yesterday was mostly green, volume, value and deals. They were all green. Top three gainers, Guinea Insurance, CNIF and Seplat. Seplat was the star of yesterday's trade. It gained about 670 naira is what it gained at the close of trade. That's a maximum of 10% that's allowed in the market. And of course, move the market and move the counter very high. So there you have the top gainers, top losers, Deep Cap, Universal Insurance and HM Coal, and then a top trade, Access Coal, Charms and Champions. But the major market mover yesterday was Seplat. And a global rating agency, Standards & Poor's, S&P, they flagged oil price swings and foreign exchange volatility as key risks to the stability of Nigerian banks. In a recent report, S&P notes that fluctuations in crude oil revenues and Naira's exchange rate could pressure banks' asset quality and earnings, particularly given Nigeria's heavy reliance on oil exports. The agency highlights that while Nigerian banks remain resilient, continued exposure to commodity and currency risks could affect profitability and capital buffers if macroeconomic shocks persist. And S&P is asking banks to strengthen risk management frameworks to mitigate potential impact from market volatility. The Debt Management Office has announced that its latest Treasury bills, that's the T-bills auction, recorded subscription of a total subscription of about 4.59 trillion naira, reflecting strong investor appetite, and it indicates a 300% over-subscription. According to DMO, the auction attracted bids far above the amount initially offered, underscoring sustained liquidity in the final system and robust demand for short-term government securities. And there you have it, 300%. Now, that's huge over-subscription. Government going to the market again, and the response seeming really positive. So it was 4.59 trillion naira worth of treasury bills that was auctioned by the DMO. Investors submitted bids that totaled 18 trillion naira. That's where we have the 300% oversubscription. So while this is what was offered, this is what investors offered. Obviously very interested, and that's a 300% due to strong demand, reflects investors' appetite for short-term risk-free government securities. Of course, we know those government securities are risk-free and not for the high-risk appetite individuals. Stanbic IBTC has reaffirmed its commitment to support clients as they navigate Nigeria's economic landscape and make informed business and investment decisions this year. The Chief Executive Officer of Stanbic IBTC Asset Management, Busola Jejelo, made this known at the launch of the bank's 2026 Economic Outlook in Lagos. The event featured renowned economist Professor Biodun Adedipe, who projects that Nigeria's economic growth is up about to 4.5% in this year, highlighting strong opportunities across key sectors, including energy, agriculture, manufacturing, and digital economy.
Beyond the numbers, turning 2026 trends into financial success sets the tone for Stanbic IBTC's Regional Economic Outlook, bringing together clients and stakeholders to examine the forces shaping Nigeria's economy in the year ahead. The event is designed to help investors and businesses look beyond headline figures, understand underlying economic drivers, identify emerging opportunities, and position for sustainable wealth creation in 2026.
While signals of stability, such as moderating inflation and improved foreign exchange conditions, are encouraging, the real opportunities lies in the understanding of the structural trends, policy, direction, sector-specific dynamics that will define financial success in the year ahead.
In his presentation, renowned economist Professor Biodun Adedipe notes that despite global disruptions and economic realignment, Nigeria ended 2025 on a stronger footing, with steady growth, moderating inflation, improved foreign exchange stability, rising capital inflows, stronger reserves, and renewed investment confidence. He forecasts a 4.5% GDP growth in 2026, driven by reforms, diversification, and easing monetary policy.
You find that every notable enterprise that is doing outlook on the Nigerian economy is expecting growth this year, stronger than 2025. What does that mean? It means you should also expect and plan to grow your business. But what it also means is this: on no account should your business grow slower than the Nigerian economy. That's one. Then we look also at the stock market. That last year, if your investment mimicked performance of the Nigerian Stock Exchange, then it must have produced 51.19% year-to-date return.
The discussion continues with a panel session as industry experts offer practical insights and respond to questions on navigating risk, seizing sector-specific opportunities, and leveraging Stanbic IBTC's advisory and investment solutions to build long-term value.
There are about 15 mutual fund products of various risk appetite for the customer. For as well as 5,000 naira, you can invest in a mutual fund consistently.
After this is for us to follow up with our clients based on the feedback that we have been given today. Also follow up based on the questions that we have also answered today, just to ensure we're able to just provide the right solution for them and answer their questions far beyond what we saw in this room.
Stanbic IBTC says the initiative reflects its belief that informed clients make better financial decisions and underscores its role as a trusted partner in navigating Nigeria's changing economic environment.
The immediate past president of the African Development Bank Group, Dr. Akinwumi Adesina, has launched what he describes as a deal and investment channel that will help lure scarce capital into the continent. The Global Africa Investment Summit, that's what it's called, and it's co-founded by Dr. Adesina, targets building a bridge for African governments, global CEOs, and institutional investors to accelerate resources. According to the organizers, strategic sectors, including critical minerals, metals, rare earths, energy, and agriculture, as well as digital infrastructure, are primed for investment. The chairman of the Nigeria Revenue Service, that's the NRS, Dr. Zak Adediji, is asking for a paradigm shift when it comes to raw material exports to the one that embraces ideas, innovation, and the production of complex products as a pathway to sustainable economic growth and national prosperity. Dr. Adedeji made the submission while delivering the maiden Distinguished Personality Lecture of the Faculty of Administration in Obafemi Awolowo University, Ile-Ife, Osun State. The lecture, titled From Potential to Prosperity, Export-Led Economy, stresses the need to rethink growth through the lens of complexity by not just producing more of the same things, and the NRS boss believes that Nigeria should learn from the world by comparative study of success and failure from countries like Vietnam, Bangladesh, Indonesia, South Africa, and Brazil. Former Vice President of Nigeria, Professor Yemi Osinbajo, is asking government at all levels to adopt infrastructure-first approach to housing development, saying that it is key to addressing Nigeria's housing challenges. He identifies that land access and inadequate infrastructure are primary bottlenecks driving up the cost of housing. Professor Osinbajo advocates for structured land assembly by the government and the provision of bulk infrastructure to make housing more affordable and accessible to Nigerians.
The whole idea, of course, is to see how we can unlock infrastructure and other critical components of housing in order to enable, inclusive housing. And inclusive housing really is crucial, because housing is not just it's not just a dwelling place, not just a habitat. It's also an economic structure. It's important for people to be housed, especially those who may not be able to afford some of what we see today, the private estates, which, as you know, of course, expensive, usually catering to the higher middle income. But housing must take into account the largest numbers of people. And so what we basically talked about is how that can be delivered. And a lot of that must be, government and the private sector, private developers working together. Government being the assembler of land, government being responsible in many cases for subsidizing infrastructure, especially where you're opening up big estates where you have mixed housing schemes. Social housing in particular requires some forms of government subsidy. So basically those are the sorts of issues that we've been dealing with.
Well, it's been a busy week in Abuja, Nigeria's Federal Capital Territory, as the Nigeria Energy Summit ended yesterday. Now let's have a conversation with an individual who was busy all through. That's why she's able to have time for us today. In fact, she couldn't even make it to the studio, and we do appreciate that you'd have been resting this morning, but taking time out here. That's the Chief Executive Officer and founder of Zigma Gas Limited, Ms. Fumi Ogwe. Ms. Fumi Ogwe, good morning. A busy one for you, but you're still looking good, not affected by the stress.
No, honestly, it's been a very busy week in the Nigeria oil and gas industry, where everybody gathered in the villa, at the presidential villa, as well as the Bola Ahmed Tinubu training conference center that used to be called the ICC, all week, discussing what is our response to all the global issues, but also the issues that are arising in the Nigeria energy space. So yes, it's been very busy, very productive, but yeah, very interesting.
When you say productive, what comes out of it, or what has come out of it, or what do you expect that makes you say it's productive?
So for me, for the first time, I feel like there's a convergence of minds, of thoughts, and of action around the table. So we have all the parties from the government side, the international community, the investors, and everybody sort of agreeing that energy transition must be just, and it must be driven by a gas strategy, but also it must be driven by the needs of the country. And in our particular instance in Nigeria, as you know, over 90% of our revenue comes from this sector. So to agree that it is a national priority driven by all of us, not just us in the industry, but also the government and the international investor community, was very refreshing. Secondly, you know about the whole geopolitics that's been going on. So all of that is also driving the agenda. There was also presence of, the president attended this summit. He made his speech, and he gave very clear direction as to what he expects to see and how it's of national importance to him. He was represented by the vice president. And then we also had presidents from other countries. And then we had the new GC of NNPC, coming there for the first time and really sharing his own agenda for the industry. There was a lot of discussion around the international service companies, international operating companies we traditionally called IOCs, to now say the other type of E&P companies, I also called IOCs the independents. So there was sort of that debate between independents, international. But I think everybody agreed that both hands need to be on deck, because the independents now, which is where we fall, are producing more than half of the country's production. So, that, sort of came to the fore very clearly. That is not a competition, it's a collaboration, because we still need the international guys with their deep pockets and deep technology to operate in those very highly commercially intensive terrains like the deep water. But you also need the independents, who are the ones that are really able to take the local risk, but also to work with the communities collaboratively in the manner that ensures sustainability. The third thing for me that was very important is that there was a lot of discussion around people. Often in our industry, because it's so capital intensive and technology intensive, a lot of people focus on those elements. But in this summit, for the first time, we had a people-focused conversation where we're talking about not only just people in general, but Nigerians. How can Nigerians sort of play in a more elevated manner in the industry? So those were sort of like the sort of three main elements that I found very productive and interesting.
And I know you did mention him. That's the NNPCL GCEO. He made it to the headlines when he said that we have been wasting lots of money operating Nigeria's refineries. And of course, everybody's attention picked at that time. But did he give a direction as to then what, since we have now realized that we have been wasting money on refineries?
I did listen to his speech, and it was a fireside chat that was very, he almost sort of opened up in a manner that was very real and pragmatic. He didn't actually say it in the manner in which it's been reported, I have to be honest. He's, they say hindsight is always very good. So he's sort of looking back to say, over the years, since those refineries, so he wasn't speaking about this particular point in time. He's just saying over the years, if you want to operate a refinery successfully, you have to have three elements in place. You must have the EPC contractor that has built the refinery. You must have the products that is going into it. You must have the financing, but you also must have the operational excellence. Until you have all of those things moving in congruence, you may not have a successfully run operation, because margins of refineries are very low, efficiency rates must be very high. So he was just saying, as a philosophy overall, in general, if we look between now and independence, how have we operated the industry, particularly in the ones that are the government-run things. So it wasn't specifically saying we've been throwing money away in that sense. He's just been saying the people side of things, in particularly in refineries, in refining, is got to be got right. Yeah, so he's saying he's looked within his organization and he feels that there's a lot of skilled people. He acknowledged that NNPC employees are extremely strong and technically competent. However, he felt that he needed to augment particularly as it comes to refining. And so he gave a very a clear roadmap as to what he intends to do in that regard.
Yeah, can you remember any of those, what he says he intends to do? Because I don't know if you saw it in the papers, I believe yesterday or 2 days ago, talks about NNPCL working with China on the refineries. And, you know, some of those talks, you really don't know how much is true or not. So, of course, the station like channels, we don't harp on it, but sometimes they say there's no smoke without fire.
I mean, he did say that he needs to augment his operational capability within the refining space, specifically within NNPC refineries, and that he was looking at partnering with, because if you remember, traditionally what people would do in this space is say, okay, let's do turnaround maintenance. Let's get an EPC contractor. Let's go back to the original builders of the refinery. Let's bring in injection of capital. And he is saying, in addition to doing all those things, he feels that he needs to add capability to what he already has on the operational part of the running of the refinery, so the everyday running of the refinery, so that he has that very high efficiency rate at very low cost. So he did say that he was looking at parties that could they could partner with to complement their own capabilities. So he didn't say he has specifically identified one party. He said that he is speaking to a few, and they are inspecting and they are going through that procurement process of procuring that party that will add capability to their operational excellence.
All right, so thank you so much for
the process has not been concluded. He has not identified one party yet, but he's speaking to a few.
All right. We really appreciate you clarifying that for us, because, you know, a lot of interpretation and understanding goes around on social media and all of that. Now, to an area that I believe you are very passionate about, which is gas. We have talked about a decade of gas. Oh, Nigeria has more potential in gas than even oil. What are some of the highlights on the conversation of gas from the summit?
Oh, so gas, again, had center stage in the sense that not only did we have very high representation from the Global Association. We now have in Nigeria, there's a SecGen there, the gas exporting country group. So he participated and gave a steer from the global perspective. But we also had the Minister of Gas, a Nigerian Minister of Gas, who was also there giving their updates on the decade of gas. But the one thing that I found particularly exciting was that they launched the gas master plan at the event. I haven't read it, but it was just launched, and I look forward to reading it. So there were presentations on the highlights, and it seemed to be something that would be quite interesting to get my hands around and really dig into it. But it was quite a robust conversation that they had around gas development. What were some of the things that were hindering it? Seemed to be hopefully resolved in this document. But a lot of the conversation, bottom line, culminated in, yes, we have the demand on the demand side, and the suppliers are really keen to meet that demand, but payments, was something that was sort of still a sticky point. A lot of the operators, a lot of the speakers were saying, you can't ignore gas to power. That's like the main market for our gas. And there were some challenges that are being resolved. Yes, there's a bond. The federal government is trying to pay off all the historical debts. But there was a lot of conversation around this can't be a one-off. There's got to be like a sustainable solution in place to ensure that anyone that wants to produce gas can see clear line of sight to being paid. And we in Sigma Gas, we're trying to develop a couple gas projects. One of the main things we obviously look at is offtake, but how are they going to pay us? Because that financial instrument, that makes something bankable is hindered on how you're going to get your money. The other thing that sort of came out very clearly is the conversation around flare gas. So there were a lot of commitments made around flare gas reduction, and I'm quite hopeful that that's something that takes center stage in 2026.
Yeah, thank you so much, and especially with the launch of that master plan, we know that PIA is a law now, and we're still struggling to meet up with parts of it. So we hope that this will be accelerated, the passage and the implementation. Chief Executive Officer and founder of Zigma Gas Limited, Ms. Fumi Ugwe, thank you so much for your time this morning.
You're welcome. Thank you for having me.
All right, now let's take a break. When we come back, AI may just be speaking your native language. We'll talk about that after the break. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. On February 2nd, Google and a consortium of leading African research institutions announced the launch of Waxal. I believe that's how it's called, a large-scale, openly accessible speech data set designed to catalyze research and build more inclusive AI technologies. The data set bridges the critical digital divide for over 100 million speakers by providing foundational data for 21 sub-Saharan African languages, including Hausa, Luganda, Yoruba, and Acholi. Let's get more on this now with the program manager at Google Research, Mr. Abdoulaye Diak, to explain to us if we should be doing this in our local dialect this morning. Good morning, Mr. Diak, and welcome to the program.
Good morning. Thank you for having me.
Good. So, sounds interesting, obviously, taking the message down there to everyone's knowledge, you know, especially when you include the Nigerian language. It's an exciting one for a lot of Nigerians. But first of all, let me find out, how is it pronounced Waxal?
It's actually pronounced Wahal. It means speaking in Wolof, a language in Senegal. Okay, so it's Wahal, even though it's spelled with an X. Yes, exactly. So this is why we need language technology.
I know, right?
I'm very happy, yes.
So how does this work? Everybody's using AI now. We use AI on our jobs and almost every part of our lives. So what's different? What does this bring to the table?
Yeah, the whole idea is, you know, whether you're a farmer in Uganda or you're a trader in Nigeria, you should be able to interact with technology in your own language. And so for that to happen, you need data for AI to work in the local language. And so for the past 3 years, we've been collaborating with leading institutions in Africa. We've been working with Media Trust Limited based in Abuja, and they've done a fantastic work in collecting speech data in Nigerian languages. And the whole idea is that this data will be used to train AI that works for us. I've been working in the AI space for the past 7 years, and what I can see is that, you know, we are going through an AI revolution. It has huge potential for the continent, but for this to really work, you know, there are several important pillars to tackle. And the number one is people, right? As our previous guest. For AI to work, we need to have people trained with AI skills. And actually, our managing director, Alex Okosi, announced last year the commitment to train over 7 million people in Africa. And that includes Nigeria. We have a Gemini plan, which allows students to access AI advanced features for free. But for this to really work, it needs to work in the local languages. Infrastructure is definitely really important. You know, when you look at the Ikiano cable that lands in Nigeria and other countries, it is critical to have that infrastructure. And we've seen last year during the disruption with the cable cut, how critical it is. And the last pillar is really data. And this is what we've been trying to tackle through language technology and also computer vision. Those are also the two important things. The data set covers over 27 languages, and it can help over 100 million people to speak in their local language. But we know that for this to happen, there's a lot more work to be done. And I have to say, although we've been working on this data set, we're not the only one. You have Data Sense Nigeria that's been working on a project called African Voices, funded by the Gates Foundation. You also have AI Saturday Lagos, which is another organization who actually been working on this for many years, including data sets for food. So just to make sure that AI can understand our context, and food is so important. But in general, it's about enabling language technology, computer vision, so that Africa can be part of this AI revolution, whether it's robotics or automation of various industries.
So what problems...
In my own context, yes, sorry.
So, okay, maybe you should conclude, but I wanted to ask, what problems specifically do you expect this to solve?
It's supposed to address the language gap. You know, if you look at the internet today, over 90% of the content is in English and other Western languages. And so if you are an innovator, an entrepreneur, or a builder in Nigeria or in Africa, it's actually quite difficult to build. You need data to build AI. So what we are trying to do is, with this massive data set that includes over 14,000 hours of speech data, we hope that people will be able to interact in their own languages, as opposed to adapting to technology. It's really AI that should adapt to us, and that's the whole idea.
Interesting. AI should adapt to us and not the other way. But what do you see? What are the stages? I know you said, I believe you're just at the beginning stage, but what do you see for Wahal and the impact on the continent in the long term?
Yes, I mean, if we look at Nigeria and Africa, we are the youngest continent. And if you think about the next decades, most users of AI are not going to be in France or the UK, but they're going to be in Nigeria, right? And so data is one part of it, to train those AI models so that they can speak to us. And we hope to address that. And also for research, if you're a research scientist today, you need those data sets to improve AI for local languages. So this is what we are trying to address.
And do we have a timeline of what to expect? And does this mean that, for instance, if my grandmom in my village wants to interact with the system, give it command, then she can use my native language and then she will get an output?
Yeah, I mean, this will definitely take a bit of time, but the idea is that this data set is open. Anyone can download it and work on it. Although it is owned by Media Trust Limited, they've released it as open source. So anyone can leverage it, including for commercial purpose. And so we look at not just Google, that obviously we want to integrate Nigerian languages into our products. But I think the exciting part is the whole ecosystem in Nigeria can now leverage this data set that we've released and other data sets from the community.
All right, thank you so much. And I believe a lot of people would want to try this out. It's Wahal, but it's spelled W-A-X-A-L. You want to speak to AI with your native language, you might just want to try. Thank you so much, Program Manager at Google Research, Abdullahi Diak, for your time.
Thank you. Have a nice one.
You too, and we're still discussing AI. A short interview by Cynthia Brazil, a professor of media arts and sciences at Massachusetts Institute of Technology, and talking about this issue of AI. We've seen a lot of job loss happening in the last, well, since we started this year. Big companies are cutting jobs and increasing their spending on AI. So the entry-level job seems to be the most that's being threatened at this time. But in this short talk, Cynthia tells us how perhaps we can brace up for the future, talking about inclusion in the adoption of AI.
AI literacy for all, starting in K-12, where we're looking ahead to what are the kinds of skill sets and mindsets and aptitudes that young people will need to be successful throughout their life in the era of AI. And as they get closer and closer to the workforce, we've started to develop new materials, 2-year technical colleges, 4-year colleges, and even people who are currently in the workforce that is much more mindful of how do we align the education and the training to the in-demand skills and the applications of AI that are in demand for those entry-level jobs. What we're definitely starting to see is industries are assuming that because young people are, they're AI natives, this is the generation that's growing up where AI has always been around, that they will naturally be more familiar with these kinds of technologies. But AI literacy and its application and use it's actually a skill. And if you don't learn how to do it safely and responsibly, it can actually diminish your ability to develop your cognitive skills, your social skills, and so forth. So how you use it, how you learn how to use it to support your learning and growth and development is actually very important, as well as how you use it in work so that you, as part of the workforce, continue to elevate your skills and capabilities and don't over-rely on AI. That risks those skills actually atrophying. So we really want to align the whole pathway, and I think the only way to really do that is to form collaborative ecosystems. So again, institutes of higher learning, public and private partnerships, government, industry, to really look at where AI is going, how it's changing entry-level jobs and skills, how it's transforming work for established jobs, and making sure, very intentionally, orchestrating and designing the educational to training to entry-level job and current job pathway, that it works for many, many more citizens.
That's right, it's time for global news now. And I guess you know where I would start from the United States, especially because there was recognition for Nigeria's, the wife of Nigeria's president at the 74th National Prayer Breakfast Meeting. It's a faith-based gathering which is attended by political and civic leaders from across the world. President Donald Trump recognized Nigeria's First Lady as her role as a pastor in one of the largest churches in the country and referenced her pastoral background. Let's hear a bit of that.
We're honored to be joined today by the First Lady of Nigeria, who also happens to serve as a Christian pastor at the largest church in Nigeria, a very respected woman. First Lady, please, where are you? Thank you very much. It's a great honor. Thank you very much. Very respected person, too. Thank you.
It's the same Nigerian. President Trump recognizes Senator Tinubu there as a respected person. Well, who knows, you would say that about Nigeria at a time like this, when we know all of the knocks that Nigeria has been receiving, especially when it has to do with insecurity. But I guess we can douse the tension a little bit before we head back to the burning furnace right there. But still coming from the United States, Power Shift Africa regarding the America First Health Strategy for this continent, and they're focusing on the U.S. interest in natural resources and its global economic impact. Our correspondent Maria Bird had an interview with the critical minerals and green industrialization lead at Power Shift Africa.
The Trump administration came in, the havoc that they created when they put the cuts on the U.S. aid, which was very strong, supportive for a lot of Africa's government's health budgets. And it was in a lot of ways unexpected, because at the end of the day, when it comes to health, it's a life and death situation, literally. So that was unexpected. So what has then happened is, of course, through a lot of diplomatic pressure from the African governments to say that we're not refusing, your self-interest, our priority, but at the same time, we rely heavily on this. And can we rethink how this could happen? What then happened is that the Trump administration came back with this America First health strategy. And there are two contradictions here. Internally, of course, in the United States, they were fighting the Obamacare, while externally they were fighting the US aid. So those two things, they seem contradictory, but they're actually in parallel, where effectively social care is not on the highest agenda for the American administration.
And just before we leave the U.S., let's see how the market traded yesterday with our correspondent, Maria Bird.
The U.S. stock market took a major hit on Thursday as the Dow Jones was down at 1.1%, shedding almost 500 points, and the S&P 500 was down at 1.2%, while the heavy-tech Nasdaq took the greatest loss of the day at 1.5% down, as many investors were watching the AI spending plans of companies like Alphabet and also awaiting the earnings report from Amazon after a week of much loss, with the Washington Post losing 300 jobs and also Amazon Fresh stores closing throughout the country, as it's clear that there has been some major shakeup in the tech industry and also across the board in the U.S. stock market. As we watch to see how the U.S. economy responds, and only time will tell how the market will fare out in the next coming weeks ahead.
That's right, Maria, but I guess starting from today, that's talk between the U.S. and Iran. The outcome would also affect the markets and sentiments of investors. I will certainly see how that goes, maybe on this side of the world by the close in the evening. That's when, when they just start their own serious talks, talking about the United States and others. Now, let's leave the U.S. and head to Britain, where housing markets showed unexpected resilience at the start of the year as UK house prices went up 0.7% in January. This is according to data from mortgage lender Halifax that was released on Friday, reversing a dip at the end of 2025 and pushing average property values more than 1% higher than a year earlier. The monthly gain was stronger than economists had expected and marked the fastest rise in more than a year, suggesting early year stability in the market despite ongoing affordability pressures and subdued mortgage approvals late last year. Germany's export sector ended 2025 on a surprisingly strong note as exports rose 4.0% in December. And that's far above what was expected by economists of about 1% increase. Official data shows lifting shipments to a 20-month high and helping widen the country's trade surplus as Europe's largest economy navigates mixed economic signals. Private credit giant Blackstone Incorporated is finalizing a $5 billion loan to finance the expansion of a major Australian artificial intelligence and data center business. According to people around that, they're underscoring the firm's growing involvement in backing technology infrastructure amid booming global demand for AI capacity. And Toyota Motor Corporation has announced that their chief executive, Koji Sato, will step down after 3 years at the helm of the world's largest automaker and will be succeeded by Chief Financial Officer Kenta Kon, effective April 1, in a strategic leadership reshuffle that's aimed at accelerating decision-making and strengthening the company's response to industry transformation. Sato will become vice chairman and take on a newly created role as chief industry officer, with focusing on broader mobility and industrial issues as the company navigates intensifying competition and shifting market dynamics. All right, now our closing moments. Now let's see what's happening in the Nigeria's equities markets this morning. Yesterday was a new high for the market. Building on that this morning, the oil share is at 170,136.40. Already it's in the green, 0.08%. Talking about the oil share. And the most active stocks in this early trade is GT. GT is experiencing profit taking now. Tantalizer is on the flip side. It's up already. 7.64%. So I won't be surprised if we see it as a top trade. Dar Communication is also up almost 1%. Sometimes you wonder what's driving the interest around these decisions that investors make. I mean, I can't think of anything going on around Tantalizers and Dar Communication. Presco has been gaining continuous already. It's more than 2% in the green this morning. Access Holdings is also active, but now is almost undecided. It's at 0.00%. Top gainers now, Berger Paints, Infinity Trust Mortgage, Austin Lars again is back, Abbey Mortgage, Morrison Industries. On the flip side, we have Maltverse, we have Total Energy. Total Energy also has been in the news recently. Geregu has not recovered, still experiencing a lot of profit taking. It's already 10% down this morning. Unicel, Interlinked, and NCR Nigeria also top losers in early trade in Nigeria's equity market. You can make a difference. So when I'll be back at 1:30, perhaps you choose to erase some of those reds in some of those stocks. So I'll have a different story to tell you at 1:30 during Business Incorporated. When I'll be back again, then we'll have 25 minutes to do business. I'm John McPaul. I'll talk to you later.